valuations. And there is no other place where this is more true than, everyone else from other countries, forgive me, but my favorite country in Africa, which is Nigeria, where private capital is absolutely on fire. Yeah. Public market, when you say, oh, I do have business in Nigeria, they say that again, please? Nigeria? Sorry. My line is not working, right? It's a big problem. So I think that explains part of what we are seeing in the IPO market. Having said that, I see the success of a private capital as an anticipation of what we are going to see in the IPO very soon. So I am excited. I think there will be a lot of activity in Africa in the IPO market. It will be definitely more on the fintech and tech side than the usual, the traditional infrastructure or power or whatever. But I'm still positive. But sometimes I have to force myself to be positive, I have to admit.
So I guess the way to look at it is, it takes a village, as they say, right? So if we stand at a distance and expect the startup ecosystem to grow on its own and solve for its own problems, I think that's a big mistake, right? And I think the investor community has a big role to play in that. Corporates and institutions have a big role to play to add value, because at the end of the day, business fundamentals are business fundamentals, right? And for me, or let's call it the winning formula, right? So at the end of the day, it's about product, people, right, and that are directed towards solving a specific problems that deliver business performance, right? So whether you're a startup or you're a company, you need to get these right. Okay, and I think one of the challenges that we face with the fast-growing scale in terms of the private capital flowing is we're building fast, we're growing companies, we're crossing borders much faster, and we're trying to get to this IPO marker as fast as we can, or the unicorn status, right? But it's kind of the wrong incentive, if you know what I mean, because the fundamentals of any company need to be there. These are the things when we make this investment decision, definitely like Global Ventures, we're proud of all our portfolio companies, especially in the fintech space, like the PayMobs, the Thunders, the NowPays of this world, all these companies, right? Because they're not great team of founders building great product and customer experiences, and solving real problems on the ground. And how do you keep your eye on the ball as you grow and scale on these fundamentals, right? Because, and I think to your point, if you have this consistency, when you go to IPO, your probability of success and sustaining in the public market will be much higher, right? All those global companies that we refer to as big tech today, right, were once upon a time these little companies, right? And the one difference that you can pinpoint that made them what they are today is the consistency on what they stand for and what they're solving for, right? And I think that's a key driver.
So Josh, can you add on there, what are the advantages of going public, right? For both the company or the country, like Nigeria, I make fun of the Nigerian exchange all the time. I was like, between devaluation and inflation and everything else, like you're literally losing money on the Nigerian exchange. But what are the advantages of going public?
Well, the obvious advantage is the liquidity, right? You enjoy liquidity, and then that has follow-on advantages in terms of how you compensate your employees. It has follow-on advantages in terms of doing other capital markets activity. For certain companies, the public markets is also a way to continue to build the brand. And so that's an important consideration as well. It's really I'd say that the principal reason though that most people will find their way to the public markets is turning their stock into a liquid stock and turning it into a currency that they can actually use. Yeah. Whether that's for, like I said, compensating employees, acquiring other companies, raising additional funds, et cetera. It's quite useful.
Yes, awesome. Thank you guys. So we're gonna dive deeper into some of the like fintech IPOs. Again, given that 5 out of 7 of our tech unicorns are in that fintech space, do you guys expect that we would see a surge in or some of these companies being IPOing in the next few years? And what can we take going along those lines from the success that Fawry's had versus Jumia and its sort of lackluster performance in the stock market? And so I'll go there and then also talk about like the dual listing in multiple exchanges, right? So you're in Nigeria and the US exchange or another European exchanges. So thoughts around those. So performance that we've seen from Fawry versus Jumia and kind of what are factors we looked
Why
at
do
there.
you say versus? You
Oh.
mean against? Like different stories?
I mean, we feel like slightly different. Like Fawry's doing pretty well. Jumia is.
Jumia is doing pretty well.
Okay. But I mean, I guess you can have that perspective. And then talk about fintech IPOs and about dual listings.
No, but if I may start, I see what you mean by Jumia because it has been quite a roller coaster, right? But the reality is it is a company that has managed to access the public markets. They were trailblazer, right? They're the first company to be listed in New York. They managed to go back. You can guess, right? We did that for them. In the last 12 months, they raised $700 million in the New York Stock Exchange. I mean, it's quite an achievement. The business model requires more time to be profitable and all that. But I think Jumia is actually a good example of what can be done. And there are also lessons there to be learned. Fawry is obviously a much more smooth upward trend. Now, I think we're going to see a lot of IPOs in the next few years. I think we're going to see IPOs in the next few months. I think fintech has everything that it takes to create a great track record of transactions in Africa, because it's as you all said, it's a sector that moves very fast, that grows very fast, that creates a story very fast, and it's a sector that solves for the needs of the many, right? And Africa, it's all about that, is tapping the mass market, finding a solution for an old problem. And as they say, fintech in the rest of the world, it's disrupting, banking and other industries. Fintech in Africa is erupting a new industry. It's not really disrupting. There's nothing to be disrupted on this front. So I'm actually very positive. I think we'll see quite a lot of transactions, great teams, and I think this will make a new phase in African listings, both domestically and internationally.
So wholeheartedly agree. So I think, of course, my view is very biased towards fintech. So I'm going to tell you that absolutely you will see much more fintech, definitely IPOs happening, because of a fundamental reason, right? Because we were just having a panel earlier about embedded finance, right? Every business is a fintech at the end of the day, and fintech is going to enable whatever company you're doing. If you're in health tech or agri-tech or ed tech, there's going to be a back end there that you need to be able to transact, and that will drive the growth, right? So fintech is becoming more of a horizontal than a vertical, and I think that's going to drive growth at a much faster pace than other sectors, in my biased opinion. Just to be clear, as far as Fawry and Jumia are concerned, again, they're not really apples to apples, to be very honest. Yes, they have achieved they went public and achieved unicorn status, etc. But very different journeys, and they are where they are probably for very different reasons. If I were to take Fawry, and again, I don't claim to be an expert, but it's been an interesting journey of how long it took to get Fawry. That journey of 12 years versus going public at probably $350 million, right? Today it's crossed the $2 billion. So it's an incredible journey, but I think the key message here is that it is so focused in terms of value proposition, in terms of the market in which it operates. And that's the beauty of a market like Egypt, right? You can create a local unicorn without going anywhere, right? And that's the power of scale that you're referring to in Africa. And I think, so I guess the question is, should Fawry have gone public at already $1 billion from day one, right? That's if you look at today's valuations, that's probably would be the case, right? So I think there was a lot of focus in the Fawry approach, and I think that paid off. And Fawry has the muscle to be able to cross borders safely at scale, right? Now, Jumia, on the other hand, has been everybody's been watching this, so it's very interesting. I think it went public at 15, hit 50, came back to 2 or something like that. It's been a roller coaster. Went up to 60. You know the numbers by heart. You've been watching the roller coaster. Yeah, but I agree with you. I mean, they have achieved something big, right? To make that mark and become the first listed company on the New York Stock Exchange. This is a legacy that's not going to go anywhere, right? Irrespective of the numbers. Now, however, we go back to the fundamentals, And again, I don't have full insight into the company, so I'm not claiming something, but I'm just going to say that people, process, and product, right? You get these fundamentals right, because again, just going out in the morning and saying, I want to build an Amazon, okay, is great. It's a great vision and North Star, but it is one hell of an undertaking, right? And you need consistency. You need to be able to build that solid foundation. And the moment you decide to cross border, it's a whole different game, right? And I think, other than, there was a lot of other challenges that are kind of outside the context of the business itself that caused kind of the roller coaster. But putting these aside, I think the learning here is just to ensure that as you scale, you are fit to scale, right? And I think they've done a good job crossing borders from that perspective. But again, were they able to do it consistently as they moved forward? Honestly, I don't know. But I think there's definitely a lesson there.
I'll just make a couple of quick points. I think, as Miguel said, it's not sort of Fawry versus Jumia. There are two different businesses. The way we think about it in the U.S. is, Fawry would be the picks and shovels, and Jumia would be the gold. In 1848, the guys who made the money were the guys who sold the picks and shovels, or manufactured the picks and shovels, not the guys who were searching for gold. The payments and digital payments is the infrastructure on which the digital economy is being built. And so the modern way of looking at it, instead of calling it picks and shovels, the modern way that investors are looking at a lot of these payments businesses as they're looking at them as an index on the digital economy. So it's a way to get this diversified exposure to this transformation that's happening from an analog to a digital economy. And so that's why I think you would see different performance fundamentally in those companies, setting aside the micro stuff, which I obviously have no insight into the way those companies are run and so forth. But I think those are fundamentally the structural differences between those two businesses, and this is also why fintech is such an important sector, especially for Africa. When I came to Africa first, which was a long time ago, 98, I was in West Africa, and they were embracing cellular telephone technology much faster than in the U.S. And it was because it was such an intuitively better infrastructure, better platform for and skipping the fixed line telephones. It made so much sense. In the U.S., we still cling on to these things. We're still writing checks at an alarming rate, and so that's one of the things. It was nice when it was back in West Africa a few weeks ago to see once again that same kind of intuitive embracing of a new technology in order to leapfrog, and so that's where I think fintech is so exciting, and I think that's also something that the investors. That's an equity story the investors are going to get, and that's why I do think you will see some IPO. I agree with my co-panelists that you'll see IPOs coming up in this space, and that's very exciting. Do you want to touch on the dual listing briefly? Or,
yes, that would be, yeah.
Because I just say real quickly on dual listing, we would, as a firm, I think we would be biased against it. We think that's only going to make, look, it's hard enough to be a listed company. You're just making it, twice as hard, and maybe even more than twice as hard when you dual list. The companies that successfully dual list are very large, sophisticated companies. And even those companies, right? We just found out this week that Royal Dutch Shell, now Shell, is abandoning its dual listing and it's going to a single listing. I may be wrong, but I know they're going back to the UK. I think they're abandoning the dual listing, right? They're going to go to a single listing. So it's incredibly, and that's a company that has decades of experienced financial reporting. To be a brand new listed company and deal with 2 different reporting requirements, probably 2 different accounting rule sets. It just we would, as a firm, I think we would generally advise clients not to do that.
It's very helpful. Thank you. Our session is wrapping up now, but I want to thank my panelists again. I think there's I have a bunch of really great notes, so I hope you guys got to learn a bit about that. I think that we're in such an exciting time as a continent, so you can literally see a company go from that really early stage, and we're seeing it, this vision, this idea, this amazing team coming together, going out, getting capital to be able to raise, and then calling on one of these guys to help you IPO. So look forward to hearing your stories in the next few years as you go from ideation to IPO. Thank you.
Thanks, everyone.